Hi guys, this is Lee with the Market Sense for the week of May 21st, 2019. The charts in this presentation are provided to us from the Trade Navigator software that's put out by Gettess. And in looking at a weekly bond market chart here, a couple possibilities. First of all, a nice turn up here, but that's set up into a potential double top. Actually, worse than that, it's a little lower high so far, which, that could be nasty. You could see a big turn off down from there. That's certainly possible. At this point, however, we were looking for them to hold support probably in the 49.08 area. They do not appear to be doing that. That would leave probably 148.16, the middle moving average here, as being the most likely area for them to hold. But they won't really be in any trouble unless they break the lower moving average, which that lower red line there is, what is that, 147.20? So, yeah, no real problem unless they break below that. And even if they break below that, it could be just part of a big sideways pattern here, which is, again, not an issue. Resistance, we were looking at 150.12. Still a possibility. I mean, if the week is inside the previous week, they certainly haven't done anything yet. And that's saying something because, boy, there's a lot of stuff out there to buffet them around, isn't there? China trade deal, potential war with Iran, got a cruiser in the South China Sea, new nuclear sites in China, in North Korea. Boy, it's like watching a tennis match. You got to keep your neck snapping back and forth so you can see what's going on, right? Stocks, of course, look quite a bit different than bonds. They'd have this tremendous run up, and then they kind of surprised everybody after going to new highs here. There was a gap down over a weekend, and they've come down pretty good and even gotten to the mid-Keltner channel. This week is still inside of the previous week, and we were kind of looking at this is 28.91 is the middle moving average. That should be the, well, let's call it the most important resistance this week. If they go higher than that, that'd just be good. Wouldn't necessarily mean they're going higher. That'd just be good. We were support looking at maybe 28.09 right here, the projected low here, which would not be taking out the previous low. The thing you have to understand is they could break all the way down to this lower Keltner channel here, and other than taking out this swing low, that really wouldn't look that bad. I mean, it'd be all the way below 2,700, and it still wouldn't even be 50% of this entire move up for the year here. So, gosh, there's a lot of risk in attempting to buy here. However, neat little trick I'm going to show you. This is not something you can set your watch by, but a lot of times when you get an extended move up like this, you'll find a swing that turns out eventually to be 50% of the move up. So from this low to this high is a little over 400 points. It's about 410 points. And if, big if this turns out to be the midpoint of the move, then you would expect this move to continue to somewhere a ways over 3,100. Again, wouldn't set my watch by that, just something to be in. If they turn up, don't think they have to, they've got what looks like a double top here, but don't think that has to be resistance. If they turn up, they could potentially go quite a bit higher. And, like an economist with both hands, they could go quite a bit lower too, and it still wouldn't really be a problem. But the good news, if they were to hold this mid-Keltner channel, which they appear to be doing so far, it's actually a pretty positive development. It's the first time they've done any real downside testing at all, and if that holds, that's pretty good. So that's what we've got for you today. I hope you can find something profitable